Hi, everyone. My name is Moe and welcome to Income Investors. With me today is John Whitefoot, and we have another exciting dividend play for you. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. No matter how safe an investment sounds, it involves risk. To read more about it, please see the description below. Fear of recession have hardly receded, and some analysts are calling for S&P 500 to drop anywhere from 20% to 45% this year. That bearish outlook should inspire even the biggest dividend hawks to consider, less exciting blue chip stocks. They may be considered boring for what it is, with cash flow, long-term share price gains, and reliable dividend. One blue chip stock we're going to be talking about today is Automatic Data Processing Inc., usually known as ADP. They're traded on NASDAQ under symbol ADP. John?
Yeah, thanks, Mo. Next to insurance, there's few things that are less interesting than payroll and benefits, but that's what ADP is known for, and they make a lot of money doing it. The company provides cloud-based human resource capital management solutions, which includes payroll, human resource management, insurance, retirement, and compliance services, as well as benefits packages, protection and compliance, and recruitment services. It basically provides these services to anyone with employees. This includes small, medium, or large businesses, from restaurants, hospitality, manufacturing, construction, mining, government, and education, you name it. And with market capitalization of, I think, 88.5 billion, it's a big company with a huge roster of customers. In fact, it provides payroll to over 40 million workers globally, and it has over 1 million clients in 140 companies. And this diverse and growing group needs ADP's products and services no matter where we're at in the economic cycle. And that's exactly why it's a great recession-resistant stock that investors should keep on their radar.
And now let's talk about how is it doing. I was reading that it reported some impressive Q3 results and raises 2023 guidance.
Yeah, management said that the results were impressive. And despite the ongoing macroeconomic uncertainty, ADP again delivered strong revenue growth, margin expansion, and earnings per share growth. For example, in their just completed third quarter, revenue increased 9% year over year, net income increased 12%, adjusted earnings climbed 13%, diluted earnings per share increased 14%, and adjusted diluted earnings increased 14%. And as you mentioned, it also increased its guidance for the fiscal year, which ends June 30th, 2023. And the company now expects to report revenue growth of 8 to 9%, diluted earnings per share growth of 16 to 17%, and adjusted diluted earnings per growth of 16% to 17%.
And how is that helping investors? These results are really strong. Does it mean more dividends for investors? How's the stock price doing, and so on and so forth?
Yeah, ADP has been about as reliable as you can get when it comes to providing a growing dividend. It last raised its dividend payout in November 2022 when it increased its quarterly cash dividend to $1.25 per share for an annual rate of $5, and that works out to a yield of 2.35%, which is pretty solid for a massive blue chip company. The $1.25 payout represents a 20% increase in its quarterly dividend, and most significantly, the 48th year of consecutive annual dividend increases. And by all accounts, it will raise its dividend for a 49th consecutive year this November. That puts it just 1 year shy of being a dividend king. And there's few companies really that can lay claim to having raised their dividends for 50 years, half a century.
And talk a little bit about ADP stock as well. How's that doing?
Well, this is where it gets interesting. Despite strong financial results and a growing dividend, Automatic Data Processing stock hasn't actually been lighting up Wall Street. It's actually down 20% over the last 6 months and 5% year over year. But when it comes to big blue chip stocks, it's more important, like ADP, it's more important to look at what's going on in the long run. Every stock faces volatility, but not every stock rewards buy and hold investors with strong growth decade after decade. And ADP is an excellent example of that. Over the last 20 years with dividends reinvested, ADP has returned profits of 1,081%. Over the same time frame, the S&P has returned 335%. Again, ADP stock might be in the red over the last 12 months, but Wall Street thinks that the company has lots of room to run. The 12-month share price target for ADP stock right now is $235 per share to $275 per share, and that points to potential gains of 12% to 31% which is pretty massive for, again, a major blue chip stock.
John, thank you so much for talking about Automatic Data Processing Inc., traded on New York Stock Exchange under symbol ADP. ADP is an industry-leading staffing and employment services company with a long history of consistent revenue growth, including growth through headwinds related to COVID-19. This helps juice its share price, provide one of the most reliable dividend on Wall Street, and having it raise dividend for 48 consecutive years. It also has a long-standing share repurchase program in place and has reduced its share count by 1% each year over the past 10 years. That's it for today. If you want to read more about John's ideas, you could go directly to incomeinvestors.com. We'll be back with another video soon. In the meantime, don't forget to like this video and subscribe to our channel.